All right. Thank you for having us. All right, today, let me, all right, so I'll start. For licensed institutions, stablecoins turn money into software, programmable, auditable, and always on. Put them under credible regulation, and they offer a safer, faster way to connect banks, fintechs, and markets. Today, we're honored to have panelists from a bank, a digital asset trading platform, and a fintech payment company. Panelists, can you please briefly introduce yourselves?
Hi, I'm Adrian Wyland. I work at Kraken, the centralized exchange, and I work on the strategic partnerships team. One of the categories I've been focused on over the last 12 months has been stablecoins, so our partnerships with issuers, our product activations on the exchange, and things along those lines.
Good morning. I'm Rita, CEO of RD Technologies. We're from Hong Kong. We do a few things, but everything around stablecoin. So we're aspired stablecoin issuer in Hong Kong. We are probably the earliest advocate for stablecoin in Hong Kong. We're in the sandbox. We're very deeply involved in the stablecoin regulation in Hong Kong. And we also run the stablecoin payment platform, which started operating end of 2023. We're probably one of the largest. We're very focused on the B2B use case. Because given Hong Kong, the status of a global trading and settlement hub. Very excited to be here.
Hi, thanks guys. So my name's Danielle Szetho. I'm from Standard Chartered Bank. And apart from the fact that most people probably know us from our Liverpool shirt sponsorship, we are an international trade bank. We're operational in around about more than 40 over countries, particularly in the Middle East, Asia, Africa. So we're known as the emerging markets bank. Correspondent banking has always been our lifeblood. As you can imagine, the topic of stablecoins is incredibly interesting for us. Not only is it massively disruptive and threatening, for us, we actually see it as a massive opportunity as well. Within Standard Chartered, I'm actually from the Digital Assets Center of Excellence. It's a really corny name, I'm sorry. But our responsibility is to actually hold the group strategy for digital assets. And we've actually been working in digital assets since our first investment in Ripple in 2016. Some of the work we actually did in Hong Kong with Ant Group, we actually launched a tokenized deposit-based remittance rail for helpers to actually send money back to the Philippines. And we developed our first risk framework for digital assets actually in 2018 as well, and have been evolving it. So quite differentiated with respect to our embracing of digital assets and especially public chain infrastructure. So very keen to chat a bit more about that.
Great. All right. So Rita, what's special about stablecoin-enabled multi-currency business accounts? If I'm running a small business, why choose RD Technologies versus a bank? What's the killer capability?
Thank you for the first question of the day. So I think it depends on different use cases, right? So with stablecoin becoming more and more mainstream, especially given regulation become more and more mature everywhere, I think we really need to break down to different use cases. So given in a given market, right, in Hong Kong, we can talk about B2B, B2C, C2C, B2B2C. So all kinds of different use cases, right? And when it comes to, for example, B2B use case, which is what we are focused on, it's very much about cross-border payment, right? As you probably know, in emerging markets, lots of exporters, importers are already using stablecoins for cross-border payment. And given China or Greater China is a export powerhouse of the world, actually lots of companies there are turning to stablecoin for cross-border payment already. Like with trade with Africa, LATAM, or Southeast Asia, and because why? Because it's atomic settlement. It's much faster than correspondence banking and SWIFT. It takes days to clear between these emerging markets and Hong Kong, but it takes a few seconds or a few minutes between those markets and Hong Kong. And because of that, they have a need to receive stablecoin, for now still need to off-ramp it to fiat, right? So so what's happening is in banks, which they are with who they've been working for years, right? These companies, some of the largest exporters, importers in that region, they've been working with banks. But when they need to receive stablecoins, banks are not offering that service yet, right? Well, maybe they will be
Not
very
yet,
soon,
not
right?
yet.
Not yet. So they will be turning to whoever will provide that service, that offer that capability to them. So I think what's happening is this movement of corporates and individuals' deposits from banks to other account providers. That's what's happening, and I think it will become a norm in 3 to 5 years' time. That there will be more diverse account providers for corporates and individuals to hold both fiat and digital asset. So I mean, like back to your question, I think it's a use case driven sort of movement because they need it for payment. That's why they need to use a different type of account providers. Yeah.
So if I own a small business incorporated in India, and I don't have the resources to incorporate a new company in Hong Kong or Singapore, can I get a business account with you guys?
Well, Wang, thank you for
Online.
giving me opportunity to advertise RD. so on the digital asset side, right, stablecoins borderless. You can open an account from anywhere with us. And on the fiat part, actually, what the SVF license we have, which is store value facility license, a fiat payment license we have in Hong Kong, enables us to open an account for businesses around the world except mainland China. So we can open account for businesses around the world. That gives us, it goes with the Hong Kong's, like a global financial hub sort of status, right? It's offshore financial center basically. So the license we have actually enables us to work with entities from all over the world.
Got it. Thank you, Rita. Adrian, from the exchange side, apart from trading, how have stablecoins reshaped liquidity and the way users interact with markets?
I would say first, it's kind of hard not to talk about trading as the ultimate dominant use case. I think it was the first, and still today, the dominant use case for stablecoins. Crypto is a 24/7 market, and I think stablecoins as an innovation were originally around providing something that can be compatible with the 24/7 nature of crypto trading and resemble a sort of like stable currency that's available at the duration and or I guess more appropriately put, like the lack of market hours for crypto trading. And so up until this point, the large value that we've seen in stablecoins has been for cross-exchange transfers so that people can arbitrage their trading opportunities at Kraken, Bybit, OKX. And so even today, a lot of the volume that we saw in your presentation, transfers on Tron and the fees related to it, we see frequently very massive block transfers going from Kraken to other exchanges and from other exchanges to Kraken, which is just not something you'd be able to support with fiat currencies. So first and foremost, I would say that remains the dominant use case on exchange and probably across the entire stablecoin ecosystem. And things related to payments and whatnot are more so the emerging use case, which over time I think will start to resemble a greater portion of stablecoin activity and market cap. What we've seen as well as an emerging use case, probably not surprising, is folks holding balances in stablecoins so as to preserve their savings against inflationary pressures. And Kraken recently introduced a neobank where we're allowing peer-to-peer transfers of stablecoins, but also any asset. And we expect that that's where the use case related to store of value and medium of exchange between people, talking about not moving $1 million between accounts, but Wayne, if we go out for a beer, can I transfer you $5 or something to that effect? It doesn't register super highly on total stablecoin activity today, but I think over the next 5 to 10 years, that will be the focus area for how we get from $250 billion in stablecoin market cap to $1 trillion, $2 trillion is day-to-day retail use cases, not related to trading and liquidity.
Right. So what you just described is Kraken expanding from a trading venue to a payment or custody type of service?
Yeah. And Kraken also has multi-asset class ambitions. And we've introduced both traditional equities in the US and tokenized equities everywhere else. And one of the really interesting use cases for stablecoins, same as I mentioned with the need for money that moves 24/7 to support crypto trading, as we try to push forward the future of 24/7 equities trading via our tokenized equities product, stablecoins are critical for being able to settle with our providers. Custodians, the issuer, the brokers, market makers, in off hours and on weekends, the money that goes between us and our providers, our users and our providers, is going to be stablecoins because fiat just doesn't offer the right solution to match what our ambition is for market availability of equities trading.
So in equities trading, let's say we tokenize NASDAQ stocks and we create that against a stablecoin market. So the market then trades 24/7. How would the existing equities market react to that? Because NASDAQ doesn't trade 24/7. And then all of a sudden you have particular stocks that start to trade 24/7.
Yeah, I think actually NASDAQ's reaction to it, you can probably see in the last week. They're looking towards a future where they make these assets available 24/7 by tokenizing it themselves. I'm not optimistic that that'll happen in the next 3 to 5 years, but maybe in the 5 to 10 year time frame, equities themselves will start to trade 24/7. And in the meantime, we are taking on the responsibility of solving that issue with our market maker partners and so on, so that the assets can at least trade hands 24/7, even if the equities themselves can't. Unfortunately, that means a lot of pre-funded inventory and some inefficiencies in the market, but at least on the stablecoin side, we have a means of settling with those providers in cash or a cash equivalent during those off-market hours.
And
so ultimately, I think equities have to catch up, but the experimentation we're doing hopefully gets the attention of NASDAQ, NYSE, and global exchanges so that they provide trading availability on a 24/7 basis.
Great. And stablecoins can take credit for all that innovation.
Yes.
Great. Thank you, Adrian. Danielle, banks have run digital money for decades. Correspondent accounts, SWIFT, CHIPS, Euro 1, RTGS. What genuinely new capability does a fiat-backed stablecoin give a bank that TradFi rails do not? And how do you see stablecoins impact core banking systems?
Yeah, and actually, I feel like the other guys have covered it really well. And I think your presentation earlier as well about the programmability is key, right? Because, where I think we're seeing quite a lot of nascent experimentation has actually been in that area of atomic DVP. So delivery versus payment. And so, that elimination of counterparty settlement risk, is obviously an incredibly attractive use case, particularly for a lot of the crypto trading ecosystem. So certainly in terms of the client set that we've worked with, and of course, Standard Chartered as a bank, we work with quite a large number of crypto exchanges, what I would call TradFi brokerages that are moving into crypto, a lot of financial institutions that are actually starting to do quite a lot of experimentation in that space. And we can see those ecosystems as they move through the fiat side because, of course, we're providing quite a lot of that on-off rail activity.
Right.
But they come to us with these use cases saying, this is how we're planning to use it and this is how we think we might be able to make it work. So that's actually been quite an interesting way for us to get sort of line of sight and visibility of how stablecoins are changing the trading life cycle. And we definitely do see that, and we actually believe that that will definitely be part of how the traditional financial ecosystem moves toward digital asset-enabled rails. And hence the reason why the infrastructure build that we've been looking at, and we started on this down this journey when we first launched some of our ventures, Zodia Markets and Zodia Custody, and so those, a licensed crypto exchange that actually offers over 70 tokens and stablecoins, Zodia Custody that also does custodianship of all of that. And of course, bringing that now into our own main organization, the main bank. So some of those capabilities now being built out of the core. And part of the reason for that is we were observing through those ventures the type of client demand and the type of client use cases. And we could see firsthand how Zodia Markets in particular has been able to generate significant trading volumes with USDC, USDT. I think they're actually now one of the top 2 or top 3 minters or brokers of USDC and T globally. So, we could see the patterns coming from them in terms of the adoption. And, we've been looking and exploring ways that we could actually leverage their technology and their business, actually, into being a liquidity provider to our trading desk. So, for example, could we actually operate our existing financial market stack where we have an EFX currency desk, which currently overs 150 currencies? We've added Bitcoin and Ether trading pairs to that, physically delivered spot and ETH, which was launched earlier this year. And, could we now harness some of that, stablecoin-enabled infrastructure to actually move or leapfrog ourselves into more of a 24/7 delivery model, because quite frankly, that's almost impossible for a bank otherwise, given the infrastructure that we have and the surrounding kind of payment banking infrastructure. So we definitely do see the opportunities from a financial markets perspective, but actually to your point earlier about the corporate use cases, both Rita and Adrian touched on. One of the more interesting things we've now started to see, especially in the last sort of 6 to 12 months, has been a very large uptick in the number of large corporate clients, like big, large multinationals who are actually accepting crypto as a payment instrument from their own suppliers and clients.
Wow.
And
when you say crypto, you mean mostly stable?
Mostly, well, actually, some of them, Bitcoin and ETH, but yeah, mostly stablecoin. And, the number of conversations we're having at the moment with our existing clients, so it's like not even new clients, existing large, massive multinationals saying, we've got Bitcoin and ETH on our balance sheet. I'm a global treasurer. I actually have stablecoin on my balance sheet that I need to do something with. I don't feel like I'm earning enough yield. So working through with them on particular solutions where we can actually take that, USDC or other type of stablecoin, USDP, and potentially then swap that into a tokenized money market fund. So for example, the Wellington Ultra Fund that we've actually tokenized here through our tokenization venture Libera, so that they can actually earn yield on those particular holdings in the same way any global corporate treasurer would do if they were swapping traditional fiat currencies into money market funds. So it's a very nice way to see how the use cases are evolving to mirror everything that was traditionally done on TradFi into this new digital asset enabled space. And I think it really proved out the point to many of our management that the investments that we'd been making were 100% on point.
I would echo that. I was just at CFO and Treasurer Forum of one of the biggest banks in the world, and the CFOs are from this bank's largest clients all over the world, and they did a live survey. Like 5% of the CFOs surveyed there already think their organization is at expert level when it comes to digital asset. Yeah, so that's I'm sure like a few years ago it was not like that, and I can also complement this with what we've seen in China or Greater China. Some of the largest companies are very actively using stablecoin and everything around it, not just for payment, right? Like going beyond it to invest it to generate yield from it. So yeah.
So Rita, yeah. But us, we're the stablecoin-enabled multi-currency business account providers, right? We're gonna run faster than them. Because if banks are now, because of their clients, they're now natively supporting stablecoins.
That's a very good point. When actually, also going back to what Adrian was saying, I think this is a year of convergence, right? So traditional equity exchanges are going to tokenization, and traditional crypto exchanges are going into equity. So it's the same thing happening across different sectors in digital asset, and the thing about evolution is incumbents, right? Like I'm not saying specific incumbents. Incumbents usually move slowly when it comes to new things. Why? Because they are afraid it will impact their traditional business, right? That's what we're seeing in different sectors across in the industry. The incumbents know what's happening. They get demand from their clients as well. But how fast they can move, how to make a big elephant dance is a different question.
Can I ask Rita and Denise? Kraken mostly focuses on like the retail front, and so, we've also had a long history of working with stablecoins. I wonder, when you're talking to these businesses, what would you say are the common issues or challenges that are hard to overcome with adopting stablecoins in like their treasury balances or anything to that effect?
For global corporates, it's definitely the accounting treatment. So boring. But no, it's real, especially if you're a global corporate treasurer, and these are the sorts of things you have to care about because, if you don't have clarity on that, that obviously has a very, very significant impact in terms of your tax burden.
So understand that accounting standards move a lot slower, even slower than legislature. But with the Genius Act now signed, for example, can we now recognize some stablecoins as money in?
So I think that's why all this stablecoin issuance regulation is the first step of the way, right? Like you have to first legalize the stablecoin in the specific market for all the other authorities to follow, right? So now, like for example, take Hong Kong as an example. Now we have the law passed; it became effective in August. So actually, the accounting authority in Hong Kong just announced that they will come up with an accounting rule for stablecoin in a year time. So I think all this regulation is the first step of the way for all the other authorities to follow. Another thing is, for example, customs, right? For example, if you use a stablecoin for cross-border payment, how would customs view that as part of your settlement chain, right? That's also very important for global corporates.
So Adrian, compared to MiCA in Europe and the Genius Act plus Anti-CBDC Act in the US, how does Asia's approach look unique to you?
I'll probably defer to Denise and Rita on like comments related to Asia's actual approach, but lessons from MiCA and Genius, I think, is that there are some pretty glaring differences in the regulatory framework between those two. And I expect that it'll probably create some challenges with regard to reciprocal treatment of stablecoins in each of those regimes if the regulators don't end up resolving the way that they think about like reserves, over-collateralization, and things of that nature, and multi-jurisdictional issuance, for instance, for stablecoins who want to be globally available. I think we've got a structure that somewhat works today, but is somewhat different based on the stablecoin issuer. And so I think my total point here is there will be issues most likely with reciprocality between those two licensing regimes. And while I can't comment exactly on how Asia is doing it, I would expect that like an important lesson from observing how those two things try to become compatible with one another is something that regulators here could be on the front foot of.
Okay, I'll put in a view because obviously as a trade bank that operates so many markets, we get to see quite a lot across the sort of spectrum. And quite frankly, what we're seeing in crypto is not dissimilar to how regulation has always been implemented. It's incredibly fragmented, especially when it comes to AML compliance, data privacy. It's all the same issues we already have in cross-border payments, but now you add a crypto element to it where you have the additional angle of fear, monetary sovereignty risk, all of these things that are keeping governments awake at night in terms of, oh my gosh, is the US dollar now coming to eat my lunch? So you've got all sorts of these variables that are actually creating an incredibly polarized approach to regulation across many different jurisdictions. So, for example, take Indonesia, one of my favorite jurisdictions. Their central bank basically banned the trading pair of Indonesian rupiah to stablecoin because they don't want stablecoins in Indonesia. They are so terrified about the monetary sovereignty risk associated and the loss of their control over money, government money. And yet at the same time, people there are just bypassing that and using US dollar-backed stablecoins instead.
Right.
Completely defeats the purpose. So I think it is quite interesting, and I do think that a lot more of this cross-jurisdictional regulatory sharing is happening. However, at the end of the day, a lot of this is still being driven by so many amazing innovators. I mean, look at the sort of use cases you've heard already on stage. And I think the power of the fact that you've actually got a technology that allows you to move a piece of value that is absolutely recognized by the two holders within seconds and to whomever you want who holds a wallet, you can't stop that. Like, you absolutely cannot stop that technology. And so for many of the more enlightened regulators we speak to, they recognize that fact, and they're like, well, we're just going to have to figure out how to work with it. And this is actually, going to be
You
an
can't
interesting
stop
challenge.
it. It lives on a permissionless blockchain. It's always on. But most currencies are a lot weaker than the US dollar. And this technology is giving people the option. It solves financial inclusion in a way. But hey, operating your own money is half of a sovereignty, right? So it is a threat.
Also, it's creating opportunity for basically, let's use the word disruptors, right? To take away the whatever value the middlemen have been extracting. It's basically creating an opportunity to disrupt in different use cases we just mentioned. There's so many things that has been there for a long time that people think it should be that way, but it's actually it can be better. So stablecoin create that opportunity, and to quote our friend Sergio's word, stablecoins are inevitable. But when it comes to regulation, the question was regulation, right? I think, and about Asia's regulation or generally global regulations or movement. I think in our society where our industry is so much led by headlines, but there are so many details actually in everything that's published, or everything that's passed the law. Like for example, with Genius Act, actually there are many things that still need to be played out, right? Like they've actually given 3 years time for FinCEN and Treasury Department to come up with anti-money AML guidelines, and FATF is coming up, with rules around stablecoin. So I think there's still. There will be some time for all this to be played out. The Hong Kong one, the regulatory guideline is already very, very, very clear, and people have been debating about regulators' requirement on holders' verified identity. That's a very hot topic in Hong Kong. But I think generally, like for us, for what we are looking at is really something that stablecoin will become a norm in everyone, corporates or individuals' account. Along with the fiat, will become another ticker in people's account. So with that grand vision, I think regulation or tight regulation will be the trend.
Thank you, Rita. One last question for Adrian. We're out of time. Adrian, in the next 12 months, name one concrete stablecoin development that you expect to materialize.
Well, I was going to say the regulatory alignment between MiCA and Genius. Which is kind of a boring one, but I think it's critical, right? Like, we're all sort of holding or waiting in bated breath to see whether or not these things will be compatible and whether or not there will be reciprocal treatment between those licensing regimes. I'm not sure that'll happen in 12 months. I don't know if the regulators will move that quickly, but I think that would be an interesting one. And then somewhere we're focused on as like an emerging category as well is non-dollar stablecoins. Market cap is small today, but especially if we want FX to move on chain and for let's call it, what is it, the stablecoin mullet or whatever it is that people talk about, for that, I think to be truly effective, we'll have to start seeing some increases in utility and availability of like non-dollar stablecoins. So that one, not so much like a concrete development because it's being worked on today, but I think hopefully over the next 12 months, we'll start to see winners in those spaces and real use cases around non-USD stablecoins.
Great. And with that, we're out of time. Thank you so much for having us. Thank you, guys.